This week we have Gavin Smith, Master Trader Gavin Smith.
Thank you, thank you, thank you.
Junior Trader Marcy Turbin. And Junior Trader Sam Hebda.
Hey.
I'm not sure you're allowed to call Sam a junior trader.
Yeah, I don't know.
How rude.
I don't know. I mean, I've dabbled in a lot of markets, but I've probably never invested as much as y'all have by any means. So I think junior's probably no. I would not call myself a senior. Amateur. We'll go with amateur trader.
Okay. Right now you're an amateur trader, but who knows
professional
what's
community
in your
marketer,
future.
amateur trader.
Amateur trader, many hats. So
yes.
I thought an interesting topic for this evening's event would be something that that really constantly is in the back of my mind since I've become an active trader some time ago, and that is perspective. Now I know that the title of this event is short-term versus long-term views, and there is that, and that is quite interesting. And as I say, I have a visual aid to get us started, but there's actually a bigger picture and something that is far more interesting about the psychology of trading that I'd like to get into. But why don't we start with what we said we would discuss? I know Gavin likes nice orderly discussion where we start, where we say we belong. And so what I have done is create, see if this, so this is actually a picture of the Bitcoin market from 2 years ago to today. And the reason I'm showing this is I have an app that I run on my phone, and it's just got a bunch of click boxes on it, and it will let you show the market as it existed. There's a very short-term view, so you can look at the market in a 5-minute view, an hour view, a day, a week, a month. And then the long-term options are 1 year and 2 year. And the first thing I clicked on was 2 year, and all of a sudden it became clear to me, oh, hang on, we're complaining so much about the condition of the market, but 2 years ago, on the 16th of September, 2020, price of Bitcoin was just under $11,000. And today we're complaining because now it's $19,000. Thoughts, Gavin?
Yeah, I mean, it is an interesting point. People do tend to focus on the very behavior of markets. So what people are looking is come down from 60 to 19. So that's bad. The question that people should ask is, and we were asking actually on the way up, should it be going from 11,000 where it was up to 60,000 in such a short period of time? You know, you often get markets will often overshoot, and people will focus on downside overshooting and get scared out of the market. But when it's going up, everyone's very much, oh, it's doing what it should do. Yeah, and it's markets overshoot in both ways, and people there is a tendency absolutely to focus on the relatively short term when looking at market behavior, and it mirrors what we were talking about a couple of weeks ago. People should try, and it's difficult at times, but should try and take a much longer perspective on their investment portfolios.
It's not only they look at the short-term view, they get emotionally invested in the short-term view. And it's not only people who are amateur traders, but what kind of headlines do you see in all the industry portals? Is this the end of Bitcoin?
People like us who have been in the market since since the last bull market in 2017, then the bear market 2018, 2019, you saw exactly the same. You saw exactly the same headlines then. You know, is it the end of crypto? Was it a bubble? Is it tulip mania? Is it now going to go to zero? You know, and people tend to take short-term view trends and just extend those trends out. And so when going down, they think it's going to go down forever. When it's going up, they think it's going to go up forever. And usually neither is right. If that's good English.
Do you think you have to make a clear delineation between what the media says so that they can get eyes on the page and what people's attitudes are?
Certainly as something you get very used to when you're looking at. Hi, Tabalo. Welcome to our little discussion.
Hey, Gavin. Hey, Marcy. Hey, everybody.
Hi.
When you're looking at markets on an ongoing basis, something you get very used to doing very quickly is disregarding news items and disregarding what they say on news portals. I mean, there's a reason. Everyone's heard the comment, "Buy the rumor, sell the fact," but nobody really gives it thought when they're reading a headline. If something's out in the press, the market's already moved, you know, because it's in that knowledge is in the market. So if something comes out, whether it's a piece of news like Coinbase is going to list this token, or Coinbase is going to do that, or the SEC is going to do that, it's unlikely to move the market any further because that perception will already be built in. Once you've read the headline, that news is already out and the market's already behaved accordingly. So I think you have to take a step back, and what's more important is actually news items and market behavior, and watching when the market behavior does something different to what the news indicates. So when you see overly bearish headlines and the market's maintaining its level, that's actually a better indicator. That's telling you that there's good underlying support for that market, and maybe you should be buying it despite the news being bad. Similarly, where if all the mood music is bullish and the market's not moving up, it's churning, then maybe it's a warning sign that you should divest of some of that holding.
For people who are not used to markets, when you say underlying support, what does that actually mean?
Somebody else was about to comment, so it'd be good to bring other people in.
I wanted to add some context, at least what I've observed in this week, at least on this kind of tactical sentiment narrative side of the market. So like earlier in the week, Monday, I was talking with some older folks. I'm out in Los Angeles, and it was kind of the sentiment that, oh, Ukraine's starting to get the upper hand on Russia. Russia is evading. And then Tuesday, market open, at least on U.S. time, and everything goes down. And similar to Gavin's mentioning, it's like you just kind of have to basically omit the narrative or the headline unless you sort of integrate that into your sort of long-term strategic view of like market dynamics. But to point to what Marcy's question on, like, for a beginner, I think that I think having a lot more structural understanding of how markets are structured in the globe is a good way to sort of escape purely just going at technical analysis and saying, okay, here's my support and resistance lines, and then I'm just going to trade if price action goes down here or there. Because any sentiment or news headline could quickly just destroy any technical analysis model or that you have on at least on short and medium term charts. So I gear it more to the macro view is what I would advise.
And I think that's a really good point that you made there, because it sounds like you do something very similar to me. You create a model in your own head about how you think the markets are unfolding, what's driving, what the key drivers are, and so therefore what's likely to unfold moving forward. And you as you said, you can never be certain. All of a sudden you get something unexpected hits it. But if you've got a framework that you're working to, then when new information comes to light, you've got something to base it on. You've interest rates are actually, inflation's high, so therefore the Fed may keep interest rates high for longer. So how's that going to affect risk assets? That then gives you the framework, as you say, to look at market action against your framework. And is it confirming your view, or is it actually showing you that perhaps you've missed something? And there's something else underlying moving the markets that is a warning flag to you. So yeah, no, I think it's a really good point. Also quite difficult, I think, for a new trader to start doing, because if I go to the average person, create a model of the market in your head, they're going to kind of look at me blankly. How do I do that? So I think there's a piece before that, which is observation, observing the markets and how they respond over time to different macroeconomic drivers. Would you say that's fair?
Oh, I totally agree, and I can tell you at least, like, so I'm on the younger professional end of the spectrum, and what I can tell you at least that I see in the with my peers that are trying to be more savvy traders, investors, etc., is that they try to find all their answers in the chart. I think there's like a better heuristic to sort of always have the question, what is the chart not telling me? And what information is omitted from a chart?
Yeah.
And then it goes into this intellect of the market that follows more sentiment, some of these market forces, whether it gets more into geopolitics and governments. But regardless of the fact, it escapes the, hey, I can just look at the chart and I can just look at the news and then I'm going to know what's going on a day-to-day basis. It's a lot more in-depth study and education that's required, especially in the history of the market.
Absolutely. I mean, it's interesting you raise that, because I mean, dating myself now, but when I was a floor trader trading in the pit, one of the things you would look for is you'd know which figures were going to be announced, and you would know what the expectation in the market was, and then what you'd be looking for isn't what the figures were and are they higher or lower than what people are expecting. It's, are they higher or lower than expectation, and does the market do the opposite of what it should be doing, given that different delta from what people are expecting? So if the figures were unexpectedly good and the market goes nowhere, as a short-term trader, that's a great selling opportunity. You would immediately jump on the market from the short side, because you know it should be going up and it's not. That's a really strong indicator for a short-term short-term trading professional, that okay, it's not responding. So that means there's a lot of longs already in the market that are looking to take profits. So we should take the opposite view. So and exactly as you say, you build up your knowledge from that very simple starting point to then build it up on a more macro view and longer term trading viewpoint.
So it's indicators like number of
Jobless
jobs,
claims, absolutely, yeah, jobless
But-
claims.
but also for commodities, then you have the specific markets. Do markets react against one another? Well, I know we see it in crypto quite a lot, because things tend to move in lockstep, don't they? But not always.
But not always. Again, I'd be interested to hear what Tabalo makes of correlations and elements like that.
So Marcy, when you say crypto, do you mean as a whole, or do you focus more like on Bitcoin or Ethereum as a
No,
focus?
I don't look at very small altcoins, but I have, for instance, an interest in the DeFi protocols, and they tend. I'm very interested in the Rails tokens, because up until I just think there are a number of technologies out there that are a reasonable next step to what Ethereum is. Things like ADA, Polkadot,
Cardano. So more environmentally friendly protocols, right? I think is what you're
Next-
pointing at.
Next generation. So Hoskinson has a relationship. One of the Ethereum founders has gone on to found Cardano, and he's taken what he learned from creating Ethereum, and he has gone on to create the next generation of Rails tokens. Phantom is another one that I have quite a bit of interest in. So it's not only that they're more ecologically sound, though that certainly is potentially a useful thing, but that they are faster, more resilient, but they tend to move.
Yeah.
Yeah.
So Ethereum's actually they're implementing their merge for proof of stake from proof of work. That's actually happening now.
Mm-hmm.
And it's kind of like been a long time coming for Ethereum to at least be able to formally communicate this deviance from Bitcoin's like, hey, we're implementing a more energy saving algorithm protocol through proof of stake versus proof of work. But again, a lot of these conversations with crypto or Bitcoin, Ethereum, and especially the layer one chains, it has to do with security. Like you can't compromise on the security of the transaction.
That's a big issue at the moment with the Ethereum merge, isn't it? Because the latest stats show that 40% of all blocks being the equivalent of mined being by proof of stake are actually coming from 2 addresses, and that's not good from a that's a very centralized situation to be in. So this was always the concern that a lot of people have had with proof of stake, that it will end up with massive centralization around the large holders. And unlike proof of work, proof of stake, there's no mechanism to change for that to change. So once you're a large holder, all that's going to happen is you're going to become a bigger holder because you're going to get most of the rewards. So that's the counter argument to proof of stake. And I think it'll be interesting to see how Ethereum pans out, because it's the first major test of an established blockchain that's done the switch, or doing the switch. As
and Marcy, I think like that's the kind of thinking to integrate with these stablecoin and payment rails, because it goes back to this fundamental view of how you denominate value. And like as far as we understand the fiat monetary system, it's essentially the time value of currency that's supported and backed by an energy, military, industrial complex. And that's kind of the overarching way I try to frame it. But I do think that for the stable coins and the more DeFi and decentralized finance that's going to happen, as a lot of these Starlink satellites become online and more rural parts of the globe get more access to financial services, whether it's Africa, Latin America, and things like that, it's certainly going to open the door for more usage of all these platforms. But I think the one that will win is who has the strongest idea. And that's kind of the beauty of the American experiment. And at least one of the remaining remnants of the beauty of the free market is that the best ideas, in theory, should always win. So,
when it comes to crypto, do you think it will end up being one winner, or do you think it will be much more fragmented than that? Nothing like what we see at the moment with thousands potentially of competing, but with 5, 6, 7 major cryptos that each focus on their niche and to deliver to their niche very well. And that niche could come about more as a factor of network effect, and people gravitate to it, not necessarily an inherent advantage of the technology.
oh yeah, I totally agree that I think the maturity will align, that each crypto will align to a specific industry or vector or a what have you, similar to how the banks have matured over time.
Yeah,
but
absolutely.
as you mentioned, like there's so many it's just ripe for fraud and scams, and people uneducated in what is not without due diligence. is I formed this view back in I think 2018, and it's kind of like there's a natural effect of like how bacteria forms. So a lot of bacteria will grow, and then a bunch of it will die off, and only the strong will survive. And specifically with Bitcoin, you actually just made me kind of tie the dots in my head. Is Bitcoin's actually becoming the favorite by oil and gas and the energy sector. And I know I can tell you specifically in Texas, they're actually working to adopt favorable tax policies that when they emit flare transmissions from an oil and gas well, that they're working to implement legislation that would benefit them to get the telemetry on the emission and then prove that the emissions are getting redirected to Bitcoin mining, and they would get tax benefits for doing so. So that's something. That's some inside baseball for us.
Yeah, no, it's there's different places around the world have very much focused on using excess power. Classic are solar stations, which peak to too much and then trough to too little. Hydro, wind farm, and there's a number of initiatives globally that look at, okay, well, we've got this excess power, let's find a way to use it, and Bitcoin mining is the obvious because it's lucrative and it adds value to the network ecosystem. So yeah, it's interesting that the local governments are now also getting involved and actually giving tax incentives, which I hadn't heard about, but that's really clever.
Yeah, the challenge though is that they want to have the telemetry, so the data of the emissions, and that's kind of where a lot of the friction comes because of a lot of these ESG mandates are about, hey, prove you're carbon neutral, negative, whatever, unfortunately those are they're honest conversations to have about energy, but again it shines light into the sort of the skeletons in the closet, but it also brings the discussion about, hey, how do we actually create a more efficient world, and especially as it pertains to this energy and monetary market structure. So yeah, I know a lot of oil and gas will be, over the years, will definitely have more Bitcoin on the balance sheet.
Yeah, I mean, it reminds me back, I think this is back in 2014, I was at a conference, and even back then, RWE in Germany were looking at using Bitcoin as a payment mechanism for micro generation of electricity. So for local communities to share power. So if somebody had excess power because of solar or because of other generation, they could sell it to their neighbor who was using more. And they actually put a prototype into a couple of towns. It'd be interesting to see how those projects have gained traction, because it's the obvious thing to do. It's a perfect mechanism for rewarding people for micro generation in a way you can't if you're relying on it going through the interconnector and then the electricity company giving you a discount on your bills. It's not the same effect. You don't get the same value proposition for the micro producers. So
yeah, and I the thing that I enjoy about these type of discussions is it's an intellectual exercise about how well we understand our own system we've created as a human species, or the lack of willingness to acknowledge what has been created. It's a very forthright conversation about what's good, what's bad, and where's the line the line about what's acceptable to a commonwealth or the common worker and the common business and stuff like that. So.
Yeah. I mean, this is now going way off subject, but it's all about that pricing of the common good, isn't it? The common asset, and climate change is a classic example of that. It's for so many years it was just guarded, but actually it's something that is the climate as a whole is owned by everybody, and if you're going to abuse it, perhaps for good reason, so abuse is a bad word, if you're going to use excess amounts of that climate change pool, for want of a better word, then you should be expected to pay for it. You shouldn't be getting a free ride on everybody else's value in that ecosystem. So I think that's something that has really come to the fore. So it's not saying that if you are a particular type of producer, you're automatically bad. If providing you can show that actually you're adding more value into that ecosystem through other means than you're using because of X, Y, and Z. So I think you're right. There's a lot of work still to be done about valuing that global common good and how people can be charged for their use of that common good.
And exactly what you mentioned, and even to add more, let's say, modern age complexity to it in the information age, is how much cyber is a part of these market dynamics.
Absolutely.
And essentially how, like, an oil and gas pipeline, which may be a critical infrastructure in any given jurisdiction's energy resources, if they don't have the telemetry, the cyber telemetry, not only just on the carbon emissions, but on the security side, they're basically an easy attack vector from like a nation state level. So it's like, it's even more multifaceted than just saying, okay, let's view this in, traditional markets and finance, economic lens, but there's a cyber lens that commonly gets not integrated into the thinking and the mental model to view this kind of cybernetic economy that's expanding.
And as we've seen in what's happened in Europe and Russia, a national security element as well. For years, Europe's had this policy: we must have green energy, and the result of that policy is they brought in gas from Russia, which it subjected them to, as has been found, national security implications. But more importantly, there's no they're bringing in gas from Russia as if that's clean, as if they're cleaning their usage up, because they're not generating, they're not using fossil fuels to generate power, so therefore it must be okay, disregarding how clean Russian gas generation is. There's almost a disconnect between what they're trying to achieve in terms of cleaning up their energy footprint against where that energy comes from. You're not going to help anybody by bringing in power. I'm using extremes here, so I'm not saying this is what happened, but bringing in power from a country that is generating that power using fossil fuels, using coal. You've achieved nothing. You've just moved the pollution from one location to another location.
Yeah, they outsource the pollution, essentially.
Absolutely. And unless you've got a global mechanism for that to be paid for, which would naturally raise the price of that polluting producer, then you've achieved nothing except it's good PR, it's good press, but it's not achieved the goal. And so I think what you're saying about monitoring, telemetry, tracking is critical. It's the piece that I think is still being worked on. I don't want to say missing because people are aware of it, but there's a lot of work to be done on that.
Do you think I could pull the conversation out of the deep weeds that
I do like to take things off
into?
on a tangent.
I wanted to obviously we have some people who have strong opinions. I have been watching the market with great interest over the last couple of months, as we have hoped on repeated occasions that we are coming out of this prolonged period of whipsawing around, and the market just never seems. It seems like it's about to recover, and then it comes off, and then it seems like it's about to recover, and then it comes off. Do you guys interpret that? Is the cryptocurrency market still so small? And in global terms, I understand it is quite small, that this is most likely down to manipulation by large players. Do you have a view on that?
What a good question. Mark, you're so good at asking the right questions.
I don't think most markets, and I include crypto in this, I don't think you can long-term manipulate. You can manipulate for a short period of time, but very quickly it will find its level. I think what you're seeing is not just in crypto, but generally there's uncertainty in the markets as a whole, because there's so many conflicting currents at the moment. The other thing to bear in mind is, yes, you're seeing sideways action BTC USD, but you're seeing that at a time when USD is going through the roof against the euro, against sterling, against pretty much every currency globally. So in non-dollar terms, Bitcoin's doing okay. It's not doing spectacularly, but it's more than holding its own. So it follows in that respect. It's similar to gold. What you'll find when the dollar's strong is gold tends to go sideways. It's only when gold is dollars falling that you'll then see the rally in gold. And I think Bitcoin is could be exhibiting a similar behavior at the moment. I mean, what's other people's view?
So I'll share my long view, and you guys tell me how I'm wrong, because that will make me strong. That will make my view stronger, or weaker, which I need to know. But essentially, my kind of long view, and this is kind of looking into the 2030 horizon, is that the U.S. is going a massive monetary recalibration that it's unconscious of for the most part. I think in the near term, all inflation, all these things, and supply chain weaponization from China and Russia will persist, which will catalyze a lot of offshore dollar finance issues to spill over into internal American financing issues. So with that said, I think the longer term is clearly the global community positioning China's banking sector to play a more dominant payment rails role in Eurasia, purely through, I guess, more efficient surveillance and telemetry of their economy. That some people like, others don't, but that's a privacy conversation. And then after that aftermath of the U.S. economic recalibration and this kind of come to Jesus moment about we may have the dirtiest shirt in the laundry basket, is that Bitcoin, and I say this from like a kind of a Switzerland perspective, is that Bitcoin will be the only way to have zero trust asset security that the Chinese wouldn't exactly be able to manipulate. After all that, we can call it Great Reset or monetary restructuring.
Yeah, I agree with you. I think Bitcoin is the gold standard, and as I've mentioned in previous podcasts, you don't need to necessarily look forward for that. You can look at economies that have had meltdowns of various types: Venezuela, Zimbabwe, Turkey, where the only way the middle classes were able to retain the value of their capital, their wealth, was to move it into Bitcoin, because there were exchange controls stopping them moving their money elsewhere. Their currency was collapsing. The only thing available to them was to actually buy Bitcoin. And I think the same thing will happen generally as inflation takes hold, and other countries, other economies suffer similar fates, and inflation becomes seen as not transitory but more embedded. Where I guess I differ in outlook to you is I don't see China and the BRIC nations being immune from this. I think they've got too much capital tied up in the Western ecosystem that I think their economies will come under just as much pressure as the Western economies. Now, I think they'll recover quicker because I think they're more dynamic, they're more flexible, whereas the West has become very sclerotic. It's quite difficult. For the Western economies can't change quickly. They've got too much debt, too much government debt, too large a bureaucracy to finance. So I think the Eastern nations, Singapore, maybe China, although China's got a big infrastructure to finance as well. But certainly places like Singapore, places like South Korea will recover much quicker because their economy will be able to adapt and will be able to take advantage of what happens. So I personally think, yes, cryptocurrency will be strong, but I think at the end of the period that you're talking about, I think investment into some of the Southeast Asian countries will also be good investment.
Yeah, and I guess like on the flaws of China being the hegemon is with their real estate market is a prime example, and basically this kind of illusion of like they've basically convinced their populace to invest into 70-year leases that are not truly privatized. They're just it's kind of a get to hunker down, and then there's this huge financing gap between the ability to fulfill those obligations. So yeah, I fully agree. The pressure is going to be immense, but from the military side of it, and when everyone kind of goes to their war chest, they have rare earth metals and they have this increasing strengthened energy relationship with Russia. So from the tech wars and the space wars, it's hard for me to be bearish China.
Interesting. I mean, again, I back in the end of 1980s, early 1990s, the one everyone was talking about in a similar vein was Japan.
Yeah.
And Japan was going to take over the world, and Japan had all this technology, and Japan had the best this. And what they praised about Japan was their strong centralized government, and the government would create these national champions, these keiretsus, these groups of companies that would steam out and would take over segments of the economy in different areas, car manufacturing, so on and so forth. And that works all the time. You are growing from a below value economy, so where for whatever reason your economy is artificially below where its GDP should be, you need that central management to promote catch up. Where it tends to fall down is once you're there. And what you found with Japan, and I think you'll find similarly with China, is that central control becomes a burden because they're not innovative. One of the strengths which you touched on of the American economy is actually not the American government. The American economy would probably do better if the American government just stayed out the way. What works really well is this ecosystem of small companies. You talked about bacteria, and that's exactly what the dot-com boom was, and similar areas of tech. You get these startups starting. They're all doing things in a slightly different way, and 90% of them will just collapse. They won't get it right. But that 10% grow to be the powerhouse of the of that industry. You can't get that from a centralized government, and that's where I think the weakness of China ultimately will be.
And it goes back to the long and short view of crypto, actually, because then you start thinking about, will these centralized sort of Ethereum Foundation and their subjective protocols win, or will the Satoshi Nakamoto protocol win?
Yeah, that's really interesting. But yeah, you're right. It's because it is very much the original decentralized and against what is actually Ethereum, quite a centralized control, at least in terms of the path that they're taking. So interesting. So Marcy, we've yet again taken you away from
Yet
your
again wandered off into the weeds of much more general conversation and not one about crypto, which is not necessarily
not one about trading. It is about crypto,
trading.
not necessarily about trading.
Trading,
So,
yes, about trading, which all in all, being an effective trader is part and parcel of learning how to interpret what's going on in the world, isn't it?
Absolutely, and this is why I said taking it away from trading, but actually it comes back to what Barlow was saying earlier. Having that worldview of what you think is going to happen. You might be wrong, you might be right, you might be wrong, but having that view allows you to test that hypothesis against market action, against news that comes out, and then adapt. So if you're right, you'll have the right long-term investment positions to take advantage of that. If you're wrong, you'll actually have a framework to see, yeah, actually, this isn't working out quite the way I expect, and you can adapt. But if you don't have that plan, if you don't have that framework, you're trading in the dark. If you're trading off, the guy I know down at the bar, he said, buy this. The guy I work with said, sell that. You've got no framework to work against. So you're just following people blindly, and that might be a newspaper pundit. You follow them blindly, and they might tell you when to buy. They're probably not going to tell you when to sell. So it's much better, as Tavallo said, have a framework that you test everything against.
I actually think there's a bigger point you're speaking about in terms of paying attention to a person over here or over there and forming your opinion based on that. There are also people who will, like little robots, draw these lines on a chart and pay no attention to what is going on in the market. They are following a set of rules, but markets don't work that way, do they? It's what you're talking about. It's based on relationships, very complex interrelationships going on in the space. Isn't that a more correct way to think about it?
I would argue that in the short term, it provides for somebody starting out. Let's start there. Someone starting out, it gives them a starting framework to look at, and providing they move beyond that, providing what they do is they look at their chart levels, and then if it breaks, they try and understand how that relates to the news. And more importantly, one of the most important things is when whatever approach they're looking at fails. Yeah, when it fails, why has it failed? Yeah, and start to understand that it's more than just, as you say, the lines on the chart. It's lines on the chart are just trying to give you an indication of when a support area has been breached. Now, if that's been breached because of actually a negative item, there's a good chance it's false, because everyone is jumping on this news item, selling, and then everyone's sold. If actually it breaks when the news is good, that's probably a really valid signal to use, because it comes back to what I was saying earlier. The news is positive. The market should be going up, and yet it's broken below a level where people were looking to were historically moving into the market. Why has that happened? Only reason that's happening is because people aren't buying on what was supposedly a good piece of news.
I'm going to ask you another question, which is in an entirely different direction. Your conversations, because of how you're comfortable and how you trade, are all about quantitative analysis. Is there a space in your worldview for effective gut feel traders, or is that just a snare and a delusion to you?
You do get some guys who are very good at it, and the consensus is it's a subconscious recognition of a set of circumstances that you've seen before. I mean, the conversation I always used to have with a friend of mine who was a gut feel trader is, how can you tell if it's the market's going to move, or it's just the curry you had last night? To me, it has no value. There needs to be a framework for me to base it on. But that's people do assimilate information in different ways, and people through experience some people will get to know if they think the market's going to fall. And
do you remember the book you gave me?
Which one?
The one, is this reminiscence of a stockbroker? Stock operator.
Yeah.
And remember that guy the way that he traded?
Yeah, but he if you actually read his approach, the actual trader that it's based on, then it was actually very systematic. He had a very systematic approach. He would look, there were particular types of market behavior that trigger him to take positions. So it was very systematic.
So it masqueraded as a gut feel trader, but his
Yeah.
gut feel was based on
Well,
key indicators.
Jesse Livermore had boards up in his office where with guys with chalk putting in prices as they happened, and he would just look at the prices, and what a modern trader does with charts, he would use the prices, the actual raw prices, and he would see a picture, and again he would be looking for stocks that were outperforming or underperforming to take action on. So that's sort of his documented approach. And remember, he made and lost fortunes in his lifetime. So,
Are there, in the same way that the stock market sectors have outperformers and underperformers, and you can track them, do cryptocurrencies have similar relationships, like in sectors? So we have the DeFi sector, we have the Rails tokens, we have the does that kind of analysis work in crypto?
I think this comes down to what Tabalo was saying as well. It's you've actually got a philosophical competition or happening between true proof of work, which is a form of decentralization, and whether proof of stake can replicate that consensus and that provide that same level of security. I think you do see, if you look at Ethereum and Bitcoin, you do see ebbs and flows in the popularity of that. Now, up till now, a lot of that has been, when are they going to get proof of stake out? So when proof of stake was looking like it was due to be released soon, Ethereum would tend to outperform. When it looked like it had been put back, it would tend to underperform. So there's a general enthusiasm in the market at the moment for proof of stake, but it's not been proven yet. And I think moving forward now the merge is happening, I think what you'll see is you'll actually start to see divergence based on people's perception of how well that's performing and how well it's delivering on that promise. Tabalo, what's your view on the future relationship of these two?
Yeah, I'll answer the quant kind of perspective first, and then I can go in more of my beliefs. Yeah, so Marcy, as far as the correlations, Bitcoin's always a leading indicator, and for the most part, it's statistically significant with its correlation with risk assets. So it'll, generally speaking, with everything dollar denominated, it will follow stocks and more risk assets. And that's just the general. And Bitcoin is usually always the leading indicator. There are certain circumstances, if you watch the Ethereum and Bitcoin ratios, that you can see if Ethereum's really gaining ground on value denominated in Bitcoin. But that's kind of a different analysis from like a quant point of view if you see it in dollars or in crypto terms. But my general belief is that, similar to Gavin's mentioning, it's really this deep question about power, control, money, and politics, and what is the more efficient governance mechanisms, and is it better that we build systems in the future that are not dependent on a single human, so that the event, if something happened to a leader, a good leader or a good governor or a good whatever, that the system can transition well without them, and design that as a first principle, or design things around a centralized entity that has won the mind share of a good governance, but in the event that sucks out, then it creates this power vacuum of chaos and inefficient markets.
I really like the way you've framed that, because that clarifies in my head why I prefer the Bitcoin model to the Ethereum model, because I'm always going to favor more independent groups coming up with innovation rather than a centralized control model. So and I hadn't thought about it in those terms, but you're absolutely right. It's interesting.
I don't know how you guys can put those two tokens into the same bucket. The use cases they're just different. The fact that they're both blockchains, yeah, they're both blockchains, but they're entirely different things.
So, Marcy, I would frame it to you like through the thought experiment of thinking like a central banker, which has superior monetary policy, which has superior characteristics that a G7 central bank, in theory, should already be doing, but they're not. But think of it from like a monetary policy about that in the security and the economics is easier than just to try to understand the technical and the cryptography and the cyber side of it.
The Ethereum so the Ethereum community are starting to run the line that Ethereum's a better store of value than Bitcoin because it's more efficient, yada yada yada. So they've moved beyond the narrative that because it's got smart contracts, it's a more useful chain. And I think part of that is because there's a lot better chains out there now from a smart contract perspective. They're cheaper, they're quicker. So even with the proof of stake, Ethereum still lags significantly behind a number of the other chains out there in terms of pure smart contract operation.
Like what?
So Solana, Phantom, both of those have got many magnitudes of transaction speed quicker than Ethereum. Cardano, ADA, that's got a better software model. Now, obviously, they haven't got the traction, so that the jury's still out on there. But they've got a much more ordered layering of the software technology as opposed to Ethereum. So Ethereum is very much first generation smart contract. So it's being positioned much more as a competitor to Bitcoin in terms of store of value. So that's I think where Tabalo is looking at it. Which of those is actually going to provide the best store of value in the economy moving forward? You know, where would you feel more comfortable having your assets lodged?
Yeah, and I can add my perspective as a business owner. So like from a treasury point of view, Bitcoin is the clear-cut winner for me in terms of having zero asset security, and a bit of the slowness to innovate is also a bit of an advantage in terms of preserving that security, ironically. And that's the irony, though, especially when I talk with older folks about democracy and is it working or is it not, but how slow it is. But as an innovator, and then on the tech side of our business is I can do more with Ethereum and decentralized applications and Web3 based authentication and NFT based utilities and stuff like that. So it is I agree with you, Marcy, that there are different use cases. But I think from a treasury point of view, Bitcoin's a winner. And I think that if you're trying to build decentralized infrastructure, for right now, Ethereum is clearly better. But I'm not bullish that it's going to take a lot of time for that idea that they're a stronger store of value to win my mind.
I think the thing that's the hope, put it that way, is that Ethereum will form the rails for regulated stablecoins, because if you can get to that point, then Ethereum becomes the de facto standard for DeFi, because you want to be able to link in to that centralized token. So that I think is where the thinking is going with Ethereum, that it becomes the if you like the big DeFi platform, because it's got the centralized tokens, or at least regulated stable tokens on it.
Okay. Well, that has been a wide-ranging and very interesting discussion. Tabalo, thank you so much for joining us again. Your perspective, it's just wonderful to have you as a member of our community. Thank you for attending. And Gavin, thank you for your perspective. You always have lots to say about this kind of thing.
Never one to be a shrinking violet. Tabalo, it was great to speak to you again. It's really interesting. Thank you.